Alright guys, welcome back. So we had a pretty tough week with the SPACs this week. Whether you invested in Hyliion, OPES, SPAQ, LCA, all of them struggled this week. And I've gotten a lot of comments from people that are kind of worried about their investment. And in fact, I actually lost $1,500 this week with Hyliion. So even one of my friends asked me about 4 times, well, should I be selling? So today we're going to be talking about why these SPACs are all falling and how should you handle it. Like, should you be buying, should you be selling, should you be holding? And also I'm going to give you the one good trick on when to buy to get the best price. So let's start right now. Alright, so we have a short video today, but I think it's going to really help you. If you want to level up your investing, please like and subscribe and watch this video until the end, because this one's actually going to save you thousands of dollars if you're going to be investing in SPACs. So if you've been following them for a few months now, you might have figured out that there are 4 different phases. First, you have the actual launch of the SPAC, Special Acquisition Purpose Company, and then after that you have the discovery phase. Third, you have the stabilization where the stock crashes. And fourth, you have the ramp up towards the merger. But what we're interested in today is the third phase, because we want to actually time our purchase or average cost down and get a better pricing for our stock. So by understanding why the price crashes in the third phase, you're going to be able to time it better and actually acquire more shares at a better price. That's going to optimize your returns. So instead of having a $1,500 loss like I did with Hyliion, which I made a mistake, which I'll talk about, we want to time it so we can get actually better prices and then we have more upside.
So I think I made a pretty good argument about there is indeed these 4 phases in the life cycle of a SPAC. So now let's move on to the meat and potato of this video, which is why exactly are they falling in the third phase after the initial hype that saw a lot of buying? So I've found 4 different reasons that I want to show you guys, which I listed on the screen. Pardon my amazing graphic skills here. So number 1, you have people taking profits. Number 2, you have no sustained buying, which I'm going to explain, and it's very important. Number 3 is that day traders are attacking the weak SPACs. And then the fourth one is that the SPACs actually are very vulnerable for the market weakness in general. And I'll give you a very good example of that coming up. So first, let's go on with people are taking profits. So it's undeniable that a lot of people are taking profits on these SPACs after the initial hype. Now I pulled up the chart for SHLL, Hyliion, because a lot of my viewers are invested in it and so am I. But I've analyzed a lot of different SPACs over the past few months and they're all following basically the same pattern. Now right now, as of filming this, the stock's at 21.55. It dropped a lot. I mean, at its peak, it was about 32, 33. I see a high of 33.50. Right? So that you have to keep in mind that's a pretty steep drop. That's 50%. But you have to keep in mind that a lot of people bought way before it was at 33.50. All of these guys here bought in the $10 to $17 range. So that's a lot of people that actually can sell in the low to mid 20s and still make a profit. And that doesn't account for people that actually bought units initially and actually split the shares with the warrants, sold the shares, and are now just keeping their warrants. So switching back to the actual shares now, in the charts we can actually find a ton of great information. What's interesting about Hyliion is that the increase was actually in 2 phases. There was this first phase here, which that's when I actually started looking into the stock when it was about 17 bucks. But very quickly there was kind of like a renewed interest in it. A second wave of people found it, and it jumped all the way to 32-ish. And if we look on the RSI indicator, which kind of helps you see if stocks are overbought or oversold, well, we can see that it quickly went to the overbought category over here. And then with MACD, which is more of a momentum indicator and direction, you see that it crossed over and now sellers took control. So there was huge buying volume over here before the actual spike. And then after that, it switched over to selling volume, which is mostly people taking their profit, finding that the stock is too high now and everything. So initially, I entered around here. and then I added some shares when it was down here. But after that, it continued going down. So now it's at 20 in the low 21s. So this first drop here is mostly from people taking profits. And along the way over here, you can probably expect that some more people just gave up on the stock. Like they bought at 17, they were like, well, it's keep dropping, so I'm going to be selling. Especially down here, which I'm going to be talking about later, there was a pretty big drop that day, and I'm pretty convinced that that's what happened on that day. It's just one of the bigger investors or a series of investors just gave up and dumped their share at a profit. All right, and about my second argument, which is that there is very little sustained buying after the initial spike. I mean, we can see it again from the chart. This is the phase two when there was a spike. If we look down here, this is the volume. You can see pretty big green bars, including this one. That's the main day where it went up to 16.3 million in buying, right? So this is when most investors, retail investors, entered their position, right? Between 17 and 32. So after that, there was this little period where people took their profit. But if you look at the chart down here, you can see that there's almost no activity going on. You go from a day that has 16 million down to like 4.5, maybe 5 million at most. And most of those are red bars, meaning that there were more sellers than buyers. Same here for the MACD. We can see that, the trend was down most of the entire time after that. So this tells us that after the initial period where the retail investors started their position, there's very little buying happening. And it's very interesting to understand that that's mostly because institutional buyers don't buy shares at that time. They either bought it before that, at the launch, they were one of the initial investors in the company, or they'll be buying after the merger because they don't want to be stuck in a stock that actually doesn't merge, right? And then they look stupid to their investors. And one of the reasons and one of the ways we can notice that is if you look at Nikola, for example, which is, as we know, one of the main competitors to Hyliion. Look at the analyst ratings and coverage that opened after the merger. So look at all of these analysts opened after they merged, starting on June 17th and as soon as recent as July 16th. So the price targets, even though the stock went up to 90 bucks and it started at 10, if you look at the price target, 54, 45, 46, 79. So much, much, much higher than what it was pre-merger. That's when the analysts actually jump onto a stock. It's when it's actually trading under its normal ticker symbol. So if you look here, you can see that no analyst is actually covering Hyliion yet, and they won't until after the merger. And that is why when you go and you look at who's actually holding the shares, yes, you can see some institutional holders, but they were already into the stock. And look at how few mutual fund are actually involved, as opposed to a company like Tesla, which if we go look at the holders, look at the massive stakes that they have and look at the mutual funds, and eventually when it gets into the S&P 500, you can expect that there's going to be even more. So that creates massive buying volume that you're not going to have in Hyliion yet until it starts merging. So that's why that is such a huge catalyst that we're all waiting for. So that's the second argument. There's very little sustained volume, which explains why the price keeps going down and it's not really a big deal. As for my third argument, it is that day traders are attacking these weak SPACs that have almost no buying volume. If you look here on Hyliion on that day, it closed at 26.89. So I added the overnight period after market and pre-market onto the graph. You can see that it gapped up to 27.70 overnight. Well, as soon as the market opened, you can see that there was heavy selling volume, bringing it down under VWAP, which I don't want to talk about today, but that's one of the indicators that a lot of day traders are using. And after that, it stayed under VWAP the entire day with a lot of selling volume. So if that's a strategy you guys want to use, you see a prime example here of when it gaps up overnight, often with low volume and very low buying, it's pretty easy for the stock to go back down. So you can make a short profit if you want to play it that way. And last but not least, you have the fact that these SPACs are very vulnerable to general market weakness. Because guys, let me ask you, what's the common thread between the SPY, which is an index for the S&P 500, a burger chain, an online casino, and a maker of Class 8 tractor trailers? There's not a lot of similarities there. But when you look at the chart every day, you'll notice a trend where when the general market is selling off, all of the SPACs are dropping too, including that day where I'm showing you in the afternoon, there was a huge sell-off in the SPY. And look at how it translates exactly the same pattern in the SPACs that dropped tremendously. So keep in mind that the SPACs, no matter what the company is, there's a huge correlation with what the market's doing right now. So if you're invested in one of the SPAC and the market's kind of volatile right now and like kind of weak, well, that goes against your SPAC. But when the market goes up one day, you'll notice that often your SPAC is getting a little boost from it. So if you notice, none of these have anything to do with your specific company. I don't care which SPAC you're involved in. None of these have anything to do with yours specifically. It's kind of like trends that you can see with this financial instrument, right? So what are we going to be doing with our position? Well, number one is to sell. I know a guy, I'm not going to mention him, but I know a guy that bought shares on margin and he's had to sell. But assuming that you're doing it the right way, you're not going to be buying shares on margin. Selling would be a mistake. Like you analyze this company and you believe that it has long-term growth potential. So whether it drops a couple bucks now doesn't matter before the merger, right? It's just market noise. So number two, you can just hold it and wait for the merger, wait and see what the price does, and if the company lives up to expectations. And the number three is what I always do, which is average cost down. So if you guys aren't exactly familiar how that works, is let's say you bought Hyliion kind of high, you bought it at 30 bucks, you bought 100 shares. Well, that means that your average cost per share is $30. But if you buy 100 shares extra at $22, well, if you add all of that and divide it by 200, you'll be at $26 per share. So as the price drops, you buy more and it helps you average down so you have a lower cost basis. So when do you buy, right? When do you know when is a good time to buy? That's what I'm going to look at now and we'll conclude on that. All right, so charts can be a little intimidating, but we'll keep it extremely simple today. This is a chart for LCA that I pulled up from my last video and when I entered this position. So this seems to be the support and this seems to be the resistance. Well, obviously you don't want to buy over here, which is the first spike. We all agree on this, pretty obvious. We all know by now that in the third phase, the price is going to drop. So you want to be either early before the spike or you want to wait until the price crashes and then you'll pick up shares cheaper. So how do you know when to buy it? Like how do you time it correctly? Well, that's when you want to use probably indicators. So without going into a lot of details in this video, this is my setup. If you guys want to copy it, I use RSI and MACD as bottom indicators. And how to read this graph is when it goes down to below 30 on the RSI, it means that the stock is probably oversold. Well, that's usually a very good spot for you to buy more shares or open your position. And also with MACD, that shows you kind of the momentum. Like, are sellers in control or are buyers in control? Over here, when it reached this little peak over here, you see how it crossed and it started going downward. Well, sellers are in control. You don't want to buy on the way down. You want to buy at the beginning on the way up, right? So this is why I actually opened my position over here, because if you notice, this was oversold and it crossed here. It was starting to cross, meaning that we were going back on an upward movement. So this is how you can time it. I mean, it's going to take a little practice, but this is why I'm doing this, to get you guys started. And by understanding the support and resistance, if you notice here, this is this resistance. Well, it tested it again, it passed it, and now it's rejecting it, so it's going back downwards. So do you want to buy right now while it's going down? No, just wait a couple days, wait until it stabilizes and you see that RSI and MACD are going back on an uptrend, and that's going to be the ideal time for you to open up your position or buy more shares. And that's how you can time the market and get a better price than most people. But for the sake of being objective and honest, I actually made a mistake myself with Hyliion. I got a little caught in the fear of missing out factor. I actually bought here even though it was on a downtrend. And since then, the price dropped a lot more. So thankfully, I average costed down exactly what I'm telling you guys to do. I bought more shares every time I see little drops here, especially when it's oversold. That's when I buy more. And now I brought my cost down from 27.50 down to 25 already. And as I buy more shares, as long as the more the share price drops, the better, because your cost basis goes down. So as long as you do it intelligently, the fact that the price drops before the merger has absolutely no meaning. It's completely unimportant. Just invest the right way. You'll be fine in the end. It's a strong company and you believe in it. I believe in it. We all know it's going to do well.
All right, so that's it for today. I hope you guys learned a little bit more about timing when it comes to SPACs. These patterns seem to be happening over and over again, so it's important to kind of time them so you can get the best price possible. So please like and subscribe. Tell me in the description if this helped you and if you're going to start using RSI and MACD to help you with your timing. And I'll see you guys in the next video.